Hello everyone, this is Sia Vijit Misra and welcome to this new video. So in this video, I'll be discussing about one of the options that is available in the Indian market where you can simply invest 93 to 94 rupees, but you can take some exposure in the top-notch tech companies like Apple, Microsoft, Tesla, Meta, Google and all the top-notch tech companies. So let's understand the first question is basically why a person has to take some exposure in all those stocks. The first thing, if you are sitting in India and you want to take some exposure in the top-notch tech companies, you cannot invest your money in the Indian stock market. Why? If you see in the Indian stock market, the top most like IT companies are basically TCS, Infosys, Wipro, Mindtree, and many other companies are there. So they are basically doing what? They are basically providing the services to the top-notch bank or top-notch consulting firm or top-notch, you can say, retail giant like that. So what is happening actually, take the example, the Bank of America is a company who is working in America and they have some software related job or software related work has to happen. For that, basically what they will do, they will just give the contract to the TCS, and what TCS will do actually, TCS will hire all the engineers and accordingly he will execute the contract. So why the Bank of America is basically giving the work to TCS? Because in TCS, if he is routing the work to TCS and he has to spend a small amount of money, but if he is doing in-house in America, he has to pay a huge amount of money. So that means the TCS is basically a cost center, you can say. So that means the profit margin or the what you can say, the potential to earn a huge amount of margin is very rare or it is not possible at all. So but in such a case, if you compare the company like Meta, Facebook or Google, so they all have a product. So take the example, in case of Alphabet, they have product like Gmail, they have product like YouTube and also Google itself, and plenty numbers of product they are having. So due to that, what happened actually, so they have the more potential to earn good amount of money, because in Google, so you talk about the advertisement, if you see the current scenario, a lot of advertisement is happening only in YouTube or in Google, in all of the like what I can say internet medias. So due to that, what happened actually, a lot of opportunity will basically come to Google to earn a good amount of money. So if the Google is earning a good amount of money, then as an investor in Google, you are going to earn a good amount of money. Same manner, take the example of like Facebook. Facebook have like different products. One is basically WhatsApp, Instagram and the Facebook. So if these three like what I can say three companies are there, so the ad revenue what is basically Facebook is getting generated or Facebook is generating, it's huge amount of money. So due to that, what happened actually, if they are bringing certain innovations, so what will happen actually, you can, or the as an investor in the Facebook, you can earn good amount of money. The same example also applicable to or for like Amazon. You are seeing the growth of Amazon in India. The same manner what is happening, the Amazon is growing in all other countries, in all, you can say, in all the countries where they're operating. So due to that, what happened actually, if you're investing good amount of money or amount of money in the Amazon, so your investment will grow like anything. But if you're investing in companies like TCS, Infosys, your company will grow, there is no doubt at all. It may grow at around like 10 to 15%, but it will not grow exponentially. That's the first thing. Second thing, what happened actually, if you're investing in the USA stock, you're not only investing in the stock, you are also investing in the dollar. So that means if today the dollar rate is around 80 rupees, and what is happening actually, after like 2 years, the dollar rate is becoming 100 rupees. And take the example, I'm buying one stock by paying $1 rupee, that is 80 rupees. After 2 years also, my stock has not moved. The stock is still, it is trading at around $1. But if I'm selling on that particular date, how much I will get? I will get 100 rupees, not 80 rupees, because the dollar has already appreciated or rupee has already depreciated by 20 rupees. So due to that, what is happening actually, if I'm investing 80 rupees $1, and after 2 years also the value of this particular stock is also like $1, but the value of $1 is 100 rupees. So due to that, what is happening, a lot of benefit or 20 rupees benefit I am getting. That's the second thing. Third is basically, if you see the stocks like Amazon, so Amazon has grown like anything. If you see like the trend of the Amazon for the last 10 years, it was roughly trading at around few dollars, but right now it is trading at around more than like $200-300. So due to that, what happened actually, the exponential growth in the tech stock normally we see in the USA market, and no doubt USA is ruling the entire world because of all this technology. So same example, if you take the example the Shopify, and there are many other examples like where you can grow your money like 10 times, 20 times, because they are tech stocks. So but in India there is no such what I can say options are available where you can invest your money in the product based companies. So due to that, what happened actually, a person has to take some exposure in the USA stock. Now again, there are basically two scenarios. If take the example, you are a person and who is having who is having a budget of around 10 lakhs rupees. In such a case, I'll advise you to what you can do actually. You can just open a Demat account, which is basically a global Demat account. In such a case, what we will do actually, you can just put some amount of money in that global Demat account, and you can purchase the stock of Amazon, Google, Tesla, and Facebook, and all other tech companies. But take the example, you are a person whose income is basically 50,000 rupees and you have a budget of around 10,000 rupees. First of all, practically it's not possible to open a Demat account, global Demat account, because it's slightly expensive. Same manner also, if you're going to do some transaction in that global Demat account, so normally what happens actually, they charge a purchase, in case of purchase and sale of the stock, around $2 to $3, which is basically 240 to 300 rupees. So in such a case, what happen actually, if you're purchasing a stock of Meta, in such a case also you have to pay around 250 rupees extra. So what happen actually, if your budget is very less, but you want to take some exposure in the US stock and you are routing through the direct method, you are investing or you are opening a global Demat account, and on that basically you are investing. In such a case, you have to incur a huge amount of money. To avoid that one, what you can do actually, you can simply choose a ETF or exchange traded fund. So that basically what happen, if you are putting your money in that particular ETF, so that organization who is managing that ETF, what they will do actually, they will pull that resources from many individuals, and then after they will invest the stock, they will invest the money in Apple, Microsoft, and Google. So by doing that one, what is happening, you are taking, or you are just having some exposure in the international market. So due to that, what happened actually, you have to, or if you are thinking to invest some amount of money in the international market, then you can think about this international ETF. So what happened actually in India, the most popular the ETF which is available is Motilal Oswal Nasdaq 100 ETF. So first of all, let's understand what is the meaning of Nasdaq. So Nasdaq is nothing. Nasdaq is basically an index which consisting of around 100 stocks, and who are basically the top 100 tech stocks. So example, अगर मैं यहाँ पे दिखाऊँ आपको, तो you can see the Nasdaq index. So who all are the companies? Basically Apple, Microsoft, Amazon, Meta is basically Facebook, Alphabet is basically Google, Tesla. They are the top-notch tech companies who are basically listed under this index that is called as Nasdaq. So take the example, you are investing certain amount of money in the Nasdaq Motilal Oswal Nasdaq 100 ETF. So in such a case, what happened actually, if you see the net asset value of this particular index fund is around 92.97 rupees. That means if you have 93 rupees, then you can invest the money in this particular index fund. Okay. So yeah. So if you have 93 rupees, then in such a case, you can simply invest your money in the index fund. That means you can take some exposure in the US stock market. And second thing, what you have to see here, is if you see the fund size, the asset under management under this particular fund is around 4,786 crores, which is quite huge. That means the stock, this particular index is basically existing, and many people have invested in this money around 4,786 crores, which is a huge amount of money. Third thing, what you need to understand actually, the expenses ratio is basically 0.58%. That means if you're investing 100 rupees in this particular stock, in such a case, what is happening actually, this Motilal Oswal, the company, they are taking 0.58 paisa, or you can say 50 or 60 paisa in all the take the example, you are investing 100 rupees, in such a case 60 paisa basically they are taking as a management fee. So this is basically the expenses ratio what is this basically fund is having. So what happened actually, if you are investing 100 rupees in this particular fund, so what is happening actually, your money is basically getting invested in so the money is basically invested in Apple Incorporation, Microsoft, Amazon, Tesla. And how the money is basically getting invested in Apple Incorporation, the 13.46 rupees is basically invested. Same manner, Microsoft Incorporation, 10.42 rupees basically getting invested. Amazon.com is also 6.88 rupees basically getting invested. Tesla Motors also, it is getting invested on 4 rupees. That means if you are investing 100 rupees, in such a case, out of that 100 rupees, 13 rupees is getting allocated to the Apple, 10 rupees is getting allocated to Microsoft. Amazon is also very investing in the Amazon around 7 rupees. So what is happening actually, if you're investing 100 rupees, you are basically diversification is happening in your investment, and the money is basically getting invested in the top most, you can say, the technology stock. So that is the best benefit about this particular fund. Let's see how the fund has performed. So if I see the 5 years result, So you can clearly see this fund has given a return of around like 17.82 percentage. You can say around 18 percentage as compared to the Nifty, which has grown around 12.78 percentage. That means if you have invested like 100 rupees in the year in like 5 years before, and every year you are getting around 18 rupees in case you have invested in Nasdaq, and every year you are getting around like 12.78 rupees if you have invested in Nifty 50, subject to compounding benefit. I'm not considering, but the general like understanding point of view. That means the return what you are seeing, it is quite good. Okay, so due to that, what is happening actually, I'm just recommending this particular fund. So if you have a low budget, and if you have low budget and you want to invest certain amount of money in the USA stock market, so in such a case you can think about this particular index fund where you can invest only 93 rupees, but you can take the exposure in the Apple, Tesla, Microsoft, and the top notch Nasdaq listed tech companies. So I hope you got a good idea about this particular index fund. So please like subscribe to my channel, because I'm bringing a lot of videos relating to this. And please share this video with your friends and family members so that they can also take certain amount of exposure in the USA stock market. So have a good day. Bye bye.